Welcome to Investing Innovations meeting. So today we're going to go over some setups. So if you guys want to tune into the live stream, I have TradingView all set up, and we'll take a look. So first off, one of my favorite runners this past month has been TGT. I'm a big fan of TGT, and I mean they've just been absolutely outperforming the market. If you compare it to um, how SPY has been moving, they have been absolutely destroying the market, and which is great. I mean, good for TGT. I'm a fan of Target. I have one near me, but yeah. So hopefully we can see them come down soon. I mean, they've been on an absolute run this week. So hopefully with earnings, maybe we might see a boost, or we might see it come down. I'm hoping to see it come down because I'm really hoping to scoop this up. But as we saw with last earnings, that was a very large gap up. Anyways, next up, AMD. I am a very big fan of AMD, and this week it has been hitting the shitter. It is just poor AMD. It broke that really solid. Let me go out a little bit. It's been breaking that 100 level, and let me, yeah, right about there. It broke that falling wedge on the triangle, and now we're kind of in this situation. But I see a lot of good support at 90. I see a lot of good support here, but I don't know. Could we break it? I'm averaging in because I love AMD. I'm really long on them, and I think that's a phenomenal swing. Next up, we have NVDA. NVIDIA, another one of my favorites. One good one to go long on. They have earnings on May 22nd, so a little bit of a distance away. But let's take a look at what's up here. So we'll just another kind of falling wedge situation, but we saw that it broke that 207 line of support and went down to 200. Nasty day for Nvidia. I believe it was like a 6% loss. I have a Nvidia's pretty big holding of mine, but I my these past few months have not treated Nvidia the best. I as a long term on Nvidia, this is not the best to see, but I think it is a great time to scoop up some shares, and we'll see what happens from there. Um, let's take a look at Baba. Baba, I'm a fan of Baba. You know, I think there really are the up and coming Amazon. Oh, let me turn that indicator off real quick. Oh, sorry. Um, sorry. Um, give me just a sec. It's fine. I won't be on this one for too long actually. So this is the daily. Actually, their downside has just been they've been destroyed over these past few months, and I'm really looking to go long right here. Now you see that that's a very nasty downtrend, but I think we might see a bottom sometime soon. I think they're really good. Good to scoop up for the long. Airbnb is a phenomenal pick. This has got to be one of my favorites. Now you take a look at the daily. They don't have too much on them. Let's yeah, gotcha. Okay, that should be good. I'm a really big fan of Airbnb. I think they're really good for the housing market. Now let's chart some levels here. Let's see. I think 150 is good. I think that's a really good entry. I'm also a big fan of 140 as well. Now I called this on my bot, and unfortunately I could not get in. I was really busy at the time. Now that really sucks, but I I think we could see it soon, maybe with the direction of the market that we're getting. But nonetheless, I think the housing industry is doing really well, and I think Airbnb is there to help out, man. People make their entire careers out of Airbnb. Next one up, we have Uber. Now, I think Uber is a phenomenal company, so to say. And honestly, if it drops below 30, I could I could see myself picking this up. Now, we've seen lows of about 15, $13 on this, but right now we're sitting kind of on this downtrend with Uber. So I don't know. We'll have to wait and see, but I think we could see under 30, and I'll pick it up. Next up is SoFi. I'm a big fan of SoFi because they're really contributing a lot to the lending space, and that is a very big industry right now, with a lot of crypto stuff going on, lending money. People want money now, and SoFi offers, and I think they are doing a great job. Now we're seeing all-time lows right now with SoFi. So personally, I don't really like to buy all-time lows unless I'm going in for a very short-term position. But nonetheless, I still think SoFi is a great pick. Now, maybe I'd like to see them a little bit cheaper. I mean, this is still a very high reward trade, considering that this is 15 to $20 in this range, and we're right now sitting at $6.60. We haven't even seen the bottom, so I think that could also be a very high return trade. Next up, I'd like to talk about TSM. TSM is really good. I love TSM a lot. Now, in past years, TSM has really respected this trend line right here. Let me move that down. Yeah. Look at that. Look at that solid trend line. It broke out, but it came back down. And it broke that trend line as well. 100 I think is a nice solid even number, and I've picked some up for myself to go long on. And I think this is a great trade because the semiconductor market is very much in need right now. And honestly, I think we could see a very high demand for that. Uh, I mean, even right now, it's still very high demand. But as they're still supplying, as they are getting chips out to more companies, that could add a lot more value to their company. So now let's talk a little bit about some trades I got stopped out on. Coinbase. Now, this I've tried trading Coinbase a couple times. I like Coinbase a lot. They're the front runner for a lot of newer crypto traders. It's mostly for people who are just getting into crypto. I'm not a fan of Coinbase. They, crazy high gas fees. All that crazy stuff. I prefer different exchanges, but nonetheless, I still think that they provide a lot of publicity, nonetheless, to crypto. So I said, let's step in right here. Actually, not right there. That's 200. I stepped in at, I believe, 185. Let's. I said 185 was a pretty good entry. I don't have the 50-day moving average up, but that was when it was moving. But now it's moved. It's completely broken that, and now we're seeing all-time lows. I don't know where we could go from here. We have nothing to work with, but I'm willing to see where it's gonna go and what bottoms it will make. And maybe we'll go on long on that. Another one I was watching, but it became an invalid trade was UPST. This was massive. I mean, this alone is like back to all-time highs is crazy, like 400% trade. But realistically, I don't know if we'll see that. I was saying this. Let me chart this. This 80 line, very solid support. Fortunately, we broke it today. We went down all the way down to 75. But this stock moves like 10% in a day. Absolutely crazy. And they actually have earnings coming up soon. May 29th of May. So I don't know. Hopefully we could see something. Our RSI actually says it's a little bit on the over oversold, and our MACD's kind of coming together. But I don't know. We'll have to wait and see what happens with this. So enough with the little bit of setup, and most of these I'll be watching throughout the weeks, and I'm really excited for a lot of these. We're seeing a lot back to these March lows. If this is May, then yeah, this is around March. We're seeing that March, February lows, and we're gonna come back and retest that. If that's a market bottom, I do not know, but if it is, I will for sure be loading up here, and I think we could see a lot of really good gain potential. So, anyways, now time to get into our main lesson of the day. Also, right before we get into our main lesson, I do want to talk a little bit about earnings this week because earnings is big this week. So, obviously, with quarter one ending last week, we saw a lot of companies are reporting this week. So Netflix, Tesla, Procter and Gamble, Snap, all those guys are reporting, and we've seen some nasty, nasty, drops. So Netflix. Oh Lord, that's the that's a crazy one. But Tesla, that was another good one. I'm long on Tesla. I think that's a phenomenal play. Uh, Other than that, though, I'm not really playing many of these. Uh, really, the only one I played this week was Tesla, and it worked out to my benefit. So, anyways, now we're gonna get into our fundamental analysis section. We're gonna get into what I like to call valuing companies realistically. So I gotta sign in. Yeah. Give me just a second. All right, so here we are at ticker.com. This is phenomenal website I love to use for fundamental analysis and valuing companies. So let's say we wanted to look up, Target on the New York Stock Exchange. We would see any news regarding this company. We would see their financials, meaning their income statement, balance sheet, cash flow statement. And yeah, you can't. This is a completely free website. I do not pay for this, and but while there is some more advantages, obviously, with any paid subscription service, I believe that this is one hell of a service. And valuations, you can look at their multiples and the analyst estimates and all that really good stuff. And you can look at SEC filings and all that stuff. So now we're gonna kind of take that to the next level. I gotta take it out real quick, and then we're gonna go to a Google Sheets. Also, plug the merch. We just launched merch, so if any of you guys are interested, we oh whoops here we go. So this is what I call the quality score list. This guy is an absolute goat. He's on YouTube. His name is I believe his name is Brian Feroldi. Check him out on YouTube. And he made this Google spreadsheet. And by the way, this is absolutely free. And this is how you rate companies. Now, I probably won't go through the whole thing. We'll just kind of look it over and see what's up. But I think it's a really great way to value companies that you love and to kind of see if it's something that's worth buying. So we'll just take a look here. Let's value Target. Everyone loves Target, TGT. And I'll come up current stock price, their market cap, and that these are we'll be changing these and these, but it says percent off 52-week high and last 1,000 days. So it gives you a nice little graph, which is really cool. And off the 52-week high, it's only down 7%. Pretty good, pretty good. I like Target a lot. So then we got to say, well, is there any recurring revenue? So let's take a look at their revenue. And by the way, if you click on any of this, oh, let me go to financials. We'll take a look at their revenues. Are they growing? Yeah, that's a very beautiful straight line. Recurring revenue. Yep. Net income profitable. Well, let's take this off and let's go down to net income. That's very profitable. They are in the positive and they're growing, which is great. So we'll give them a hard yes. Free cash flow, is that positive? Let's see. Let's go down to free cash flow. Yeah. Oh, whoops. Let's just take a look at free cash flow. Yeah, it's growing. I like it a lot. Yeah, yeah. They this past quarter they've been hitting it out of the park. Did they beat the SPY over the last 5 years? So for here we have to go to the chart and we have to look up TGT and we have to compare it with the SPY. So here we'll go with whoops. Here we go. We go with SPY and we go same percent scale. Yeah, it has outperformed the SPY. Good for you. Good for you, Target. Well, actually over the past 5 years. I'd say it's pretty consistently beat the SPY. Oh, I don't know what's happening here, but yeah, pretty good. Definitely. Obviously right here kind of fell weak, but I think I think that's very fair to say that they beat the SPY. Um, so now we come over here. Now we just kind of look this over real quick. We're gonna go and kind of see what this is about. And I'm not gonna go in depth because that would take a very long time. But just to kind of give you the basic idea of how we're valuing. All right, so here we have financials. We're looking at, how strong are their financials? What's their gross margins? If the company's not making a high gross margin, then they're probably losing money. If it costs $2 to make something and they're only selling it for $1, that's a pretty bad margin. Return on capital, that's and free cash flow and earnings per share. Those are always important. Moat is their competitive advantage. Now we're looking at this from a very realistic standpoint, and I prefer this standpoint much more than trying to just read the numbers. Because if you try to read the numbers, I mean, you're just gonna get a lot of numbers. But I think looking at it from a realistic standpoint kind of makes you wonder: do I really believe in this company? What is their advantage? Who are their competitors? You know, all that really good stuff. So that it makes you think about your favorite companies and makes you have more faith in them if you answer those questions a lot with yes or they have very high ratings. So moat is competitive advantage. So, a network effect or a product ecosystem would be, are you telling your friends about this and do they have products that work with other products? Apple, you can't just buy one. You buy the watch, you buy the Mac PC, you buy their phones, you buy the AirPods. They all work together perfectly. I consider Apple to be absolutely great on this list. But yeah, switching costs, that would be like, is it a pain to switch over? For TGT, I mean, they're a retail store, so I really wouldn't consider them a pain. You just drive to a Target rather than, a Walmart or whatever. But yeah, so kind of moving on, intangibles would kind of be their name. What are they known for their name? And does Target hold a lot of power? Does the name Target hold a lot of power? Meaning, like, the name and brand Amazon holds a lot of power because everyone's like, oh, I use Amazon a lot. It's like, oh, I use Amazon too. It's a very powerful brand and name, and people go out of their way to use Amazon. Now for Target's situation, I like Target. I don't normally go out of my way for Target, but I think that for when I am there, they do have a lot of good things to offer. Now, moving on, I'd say their moat direction, which is their competitive advantage getting bigger, or are they losing advantage in that? And like since they're a retailer, are they losing advantage in the retail market? Which is a great question. Now, I don't think it's widening personally because it they aren't doing that much. They have really good financials. I've taken a look at them previously, but in my opinion, I don't really see their competitive advantage getting bigger. I haven't really heard much news about them recently, but yeah. So next is their potential. We're kind of looking in the future. Now some of these might be like top dog or first mover. No, Target's none of those. This is not a new industry. This is not anything new. Customers. Um, do they spend a lot on marketing? I see a lot of Target ads. Actually see a lot of Target ads, but I don't really hear anyone talk about Target. You always hear people talking about, oh, I'm getting a new iPhone. Renewing my Amazon subscription. But you don't know anyone who's like, oh, Target's great. I'm going to Target. You know, it's okay. So then we kind of look at their dependence. If something bad happens, what's gonna happen to them? Um, COVID. I mean, obviously it took away customers, but they're not a fortress. But I would not say that they're weak because they're pretty good. I think they have a pretty good defense. Um, Kind of moving on. This is company specific, recurring revenue, pricing power, management and culture. Soul in the game. It matters a lot if the CEO is the founder of the company because then he cares a lot more. Inside ownership. I won't look into SEC filings right now, just to in the sake of time, but you can take a look at SEC filings and see how much employees are getting uh are, are getting compensation. How much does the CEO and chairman and the board, how much do they own of the company? And Glassdoor ratings are those are people that have worked at the company and they rate the company. Mission statement, uh, why not? We'll take a look at just for fun. We'll take a look at sorry, give me just a second. We'll take a look at target mission statement. We fulfill the needs and fuel the potential of our guests. That's okay. Um, I mean, do you feel like every time you go to that store, if you ever bought from that store, has that been completed? Honestly, I'd say yes to that statement because they definitely fulfill my needs when I go to Target. But yeah, so next up, their stock is I like their stock a lot. They're always beating expectations, and I'm just a big fan of TGT stock. So I'd say they have a pretty good score. Obviously, we're not rating them specifically, but now it's time for what's called the gauntlet. This is called the gauntlet because it is a group of factors that would make you lose trust or take points off in the company. Now, this could be anything from accounting irregularities. That's terrible. That's very antitrust. Uh, Consumer concentration. I don't know if Target has that much of a problem with that. And yeah, so these are a lot of very general concerns that you should be concerned about. Now, this is kind of the scoring guide to help you out. Next, we'll take a look at their anti-fragility score. This means when hard times come, will target survive? Will target survive? So, we look at their financial fortitude, we look at their skin in the game, and we look at a lot of other things too. So I won't go too specific into this, but I think it's very important to know, if you're buying a company like Uber, that COVID did destroy that company over during the height of COVID. Now they're getting a lot of business, but back then it did. But companies like Amazon, they thrive because delivery really isn't affected by COVID. You can deliver, you can pretty much deliver whatever. Like DoorDash, it's fine because you COVID didn't really affect that. An epidemic changed a lot of companies for sure, but and it got rid of a lot for sure. But yeah, so that's what I use for fundamental analysis. Investing resources, these are all really good. I use a lot of these. Uh, and these guys are all really cool. And these are all their best, their favorite books, and there's Amazon links to them. So yeah, I'll post this in. Let me actually post this in chat so I can get this. Uh, let's actually see. I'll post this in radio chat so that you guys can all have access to this. This is absolutely free, by the way. So is Ticker. I'm a really big fan of Ticker. I use this. Oh God, I don't even know. And TradingView, obviously a free resource. So yeah, that's pretty much what I got for you guys today. Good lesson. So I saw definitely some good setups. And if there's any questions, if you guys like to ask me anything, any opinions, or if you'd like me to chart anything, or take a look at their financials, I'd be more than happy to. Just say something in the chat. Oop. Okay. Whoops. Say something in the. Oh, BTC long. Yeah, I'm a big fan of. Oh, whoops. I like I like BTC a lot. That's a good setup. Let's take a look. Oh, that's the 1 hour. Let's take a look at the daily. Yeah, they had this really, uh, whoops. They've been having a lot of good runs, and yeah, I like Sol. Recently, Sol just made a really good announcement that they are going to provide like payment options or merchant accounts, and I think that's great for Sol. I'm really bullish on Sol, and I think it's something to go really long on. Uh, another trade that was high risk was LMR. I know Chucks will tell you about that one, but Lumerin. Lumerin Tether. This one was absolutely crazy. I kind of have to go to a smaller type frame for you to see that, but yeah, it's been kind of getting pooped on over time. But yeah. Um and also there's some other really good this is for institutional trading actually. These people like Berkshire, you can follow Berkshire Hathaway. That's another really good way to trade is to kind of see what the big guys are trading. You know, these guys are buying like Chevron and Activision and oh yeah. So, but these guys all hold the basic companies. I still love Apple to this day. So yeah, that's pretty much what I got for you guys today. If maybe I'll just take a look at some other some other stuff. And oh yeah, these are earnings transcripts as well. But honestly, I let's actually one more thing I did want to do was take a look at chart SP. Oh, I already have SPY open. So yeah, this let me clear all. Um Remove. Okay, so I think we have a lot of hard resistance right here. We've seen a lot of resistance right here. I also think that 435 is also a very solid level. So yeah, we're kind of stuck in this sandwich. Let me add the 200 day SMA and Uh, yeah, the 200-day SMA. So yeah, it's kind of sitting right under it. But again, our RSI does say it's under 50, so it is undervalued. But yeah, that's I think in the coming days, if this breaks, we'll definitely see some big downside. I think we could see back to March lows. I think we could easily see back to March lows. But if we break this 200-day, let me add the 50-day. Um, it's what I'm still a little new to TradingView, but yeah. So I think we could probably really break to the upside if we break this very heavy resistance. I think I think we'll be golden for some really good opportunities. But right now, I'm loading up on all the companies I said earlier. Make sure to check my alerts for more information, and I'll be pretty active this next coming week, and we'll see. I think we'll see a lot of really good opportunities. Like I said, I think probably my favorite play so far is I gotta say is Nvidia at 200, or probably AMD. Let me actually. Um, yeah, we have some good support here, but also I mean they're down really bad after the from the 200-day moving average, and like I said, earnings is coming up soon. So yeah, hope you guys enjoyed the meeting.